Welcome everyone. In this video I want to explain one of the main issues with AMD stock. Then I am going to determine what price you should pay for AMD stock using my discounted cash flow model, and I am going to finish the video giving my opinion on whether this stock is a buy or not. Let's start with the main problem with AMD stock, which is share dilution. They have over doubled their shares outstanding in the last 12 years. They have 5 times more shares than they had 20 years ago. What this means for you as an investor is that you are sharing the profits of the company with more and more people. Even if the company grew 5 times, you saw no benefit as an investor. For example, if a company makes $10 a year and it has 10 shares, each share gets $1 of profit. Let's say in a couple of years this company makes $50 a year. But now they issue 40 more shares. Each share gets $1. There was no benefit to the shareholder. Even if the company grew 5 times, the number of partners also went up 5 times. This is what happened with AMD. And I don't know when this is going to stop because they have been diluting shareholders every year. And as you are seeing on screen, you can take a look at this in the income statement of a company where it says shares outstanding. Now to determine if AMD is trading at a fair valuation, I am going to use my discounted cash flow model, which tells me at what price I should buy a stock based on my assumptions on the future of the company. And I am going to make 7-year assumptions on revenue growth, net income, free cash flow, P and price to free cash flow, and the discount rate, which is the return you want to get on your investment each year. As you can see, according to my assumptions, this stock is expensive right now, as it is currently trading at $97 a share, and the buy points are $20 for the low assumptions, $36 for the middle assumptions, and $67 for the high assumptions. Even in my high assumptions, in which I have AMD growing at a 20% rate every year for the next 7 years, having an 11% profit margin and cash flow, which is currently at 8%, and applying a 21p and price to free cash flow, the buy point is $67. And the assumptions do not take into account the share dilution. Now, let's assume that they keep issuing shares. I assumed that they issue 3% of their shares every year for the next 7 years, which is more or less what they have been doing. And as you can see, the buy points are logically even lower. My opinion is that AMD is a great company, but I am avoiding it because it's not trading at a good valuation and it's diluting its shareholders a lot. I hope you enjoyed the analysis, and I'll see you on the next one.